Pleasant evening. Welcome to Bizworld. The World Bank has lowered its gross domestic product GDP target for Malaysia to negative 0.1% in 2020 against the backdrop of growing uncertainty over the duration and overall impact of the COVID-19 outbreak. According to the East Asia and Pacific Economic Update April 2020 report, this is a significant drop from its previous GDP target of 4.5%. The World Bank said the marked reduction incorporates the slower growth momentum from the second half of 2019. But more significantly, it reflects the impact of the outbreak, where the current large-scale disruption of economic activities would extend for most of the year, before a partial recovery toward the year end. Looking ahead, the World Bank said net exports and investments in Malaysia are expected to experience a larger contraction in 2020, while private consumption is expected to grow at a much slower pace, from 7.6% in 2019 to 1.6% in 2020. Bank Simpanan Nasional (BSN) has received 700 million ringgit from the government for disbursement of loans or financing to COVID-19 hit micro-entrepreneurs through the BSN Micro iCredit Prihatin. Its CEO, Dato' Yunus Abdul Ghani, said the financing is offered at 2% interest rate without collateral to all micro-entrepreneurs in various segments on condition that they have been in business for at least 6 months instead of 1 year previously. He said in order to enable micro-entrepreneurs to continue their business, the maximum financing amount was also increased from 50,000 to 75,000 ringgit for each entrepreneur, with a loan or financing period of between 1 and 5.5 years. Entrepreneurs applying for the program are also given a 6-month moratorium on monthly installment payments. The rates are as low as 3.5% to 4% are also offered to customers for existing products and financing, such as the Special Relief Facility, Agri-Food Facility, as well as Automation and Digitalization Facility. Islamic finance is set to keep expanding in 2020 and beyond as the Gulf Cooperation Council GCC countries and Malaysia help drive growth in Sharia-compliant financial products, even though COVID-19 may disrupt sukuk issuance. Moody's Investor Service said Saudi Arabia would remain the world's largest Islamic banking market, while the sector would continue to expand rapidly in Malaysia. The rating agency expects sukuk issuance to remain stable at around $180 billion this year. The takaful insurance market also will see steady growth as insurance premiums pick up in newly penetrated markets. However, downside risks are rising because of the COVID-19 pandemic, as prolonged market disruption could dissuade issuers from coming to the market. Moody's noted that Malaysia, Indonesia and GCC countries will continue to drive corporate sukuk issuance in 2020 and expects that sukuk issuance this year to be in line with volumes in 2018 to 2019. Malaysian Palm Oil Association MPOA and Malaysian Estate Owners Association MEOA appealed to the Sabah state government to allow palm oil industry players to resume operation only for the essential and critical operation. In a joint statement, the palm oil group said this includes harvesting, crop evacuation as well as milling during the Movement Control Order (MCO). They believe that there would be social impacts from the closure decision as well as the resulting consequential damage to the palm oil industry in Sabah. By closing operations, it only highlights the operational nightmare in addition to the potential revenue loss of about 860 million ringgit for a month's closure in Sabah. There would also be a loss of 57 million ringgit in tax revenue from the 7.5% sales tax placed on palm oil, which could be used to combat COVID-19. The Sabah Chief Minister, Dato' Sri Shafi Abdal, announced the closure of estate and mill operations in 6 districts, including 3 new additions, which are Tawau, Lahad Datu and Kinabatangan, until April 14th, after 7 estate workers tested positive for COVID-19. That's all the time we have for Bizworld this time around. I'm Arif Subhan. Thank you for watching. We shall continue to bring you the latest updates here on TV3 as you continue to stay safe and stay at home.